Hello everyone, welcome to EduTap and welcome to Finance 360-degree session. So in today's session, we are going to discuss three very important news articles. The first one is RBI has granted the SRO status to the FIDC for the NBFC sector. So what were the criterias for the SRO NBFC? How many SRO NBFCs there can be? So all of this we are going to discuss in today's session, and this is a very important news article because this is released recently before the examination, so this is important. Okay, the next one is RBI has set ways and means advances at 50,000 crores for the second half for the central government. Okay, so this is also important because in the last year RBI grade B examination a direct question has come from the ways and means advances. Next is central and state cooperative banks brought under the ambit of RBI's Ombudsman scheme. So this we will discuss that which are the entities that are under the ambit of the Ombudsman scheme of RBI. So let's get started without any delay. But before that, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Starting with the first news article, recognition of SRO for NBFCs. The self-regulatory organization, they are the link between the Reserve Bank of India and the NBFCs. Okay. So basically, the SRO, the self-regulatory organization, they provide a link between the RBI and the regulated entities of RBI. So if let's say a NBFC or if a few NBFCs, if a category of NBFC, they are facing a problem. Now these NBFCs cannot go directly to the RBI again and again with their problems. Okay, if they are facing any issue in understanding of the circular, in understanding of the regulations, they cannot directly go to RBI for the clarification. So rather, the SRO provides this linkage. If the NBFCs, they are facing any issue, they can share their issue with their self-regulatory organization that can share the issue with the RBI. Okay, and the RBI can share the circulars or can share the clarifications with the SRO that can be shared with the NBFC. And the SRO can help the NBFCs in following the regulations of the Reserve Bank of India, in understanding the regulations of the Reserve Bank of India. So SRO, they provide a very important linkage between the regulated entity and the Reserve Bank of India. Okay, now the SRO for the NBFC sector has been identified, or for SRO for the NBFC sector has been recognized. Okay, so this we have to discuss. So now see, the Reserve Bank had issued the press release in 2024 inviting the applications from the entities that were interested in being recognized as the SRO for the NBFC sector. Okay, so the invitation of application, the RBI invited the application from the entities that wanted to be recognized as the SRO, as the self-regulatory organization for the NBFC sector, as well as in this press release RBI also laid down certain criteria that have to be fulfilled by the SRO NBFC or the entity that want to become the SRO for the NBFC. Now the RBI received 3 applications or letters of interest from the entities that wanted to be recognized as SRO for the NBFC sector. So RBI received 3 applications from 3 entities that wanted to become the SRO for the NBFC. Okay. Now the applications or references from these 3 entities, they were examined against the relevant requirements as prescribed under the omnibus framework, under the complete framework for recognition of SRO for the regulated entities under the RBI. And in the press release also, there was the requirements that were laid down, the criteria that were laid down, that if a entity wants to become the SRO for the NBFC sector, what criteria it have to fulfill, what requirements it has to fulfill. Okay, so as per these requirements that have been laid down in this press release as well as in the omnibus framework, the RBI saw these 3 applications, and it was decided by the RBI that only one of the application or only one of the entity will be selected for the SRO NBFC. So based on the examination, on the basis of the 2 guidelines, it has been decided to recognize Finance Industry Development Council as an SRO for NBFCs. The remaining 2 applications were not considered since they were incomplete as on the last date of submission of application. Okay, so this is the idea. So FIDC, that is the Finance Industry Development Council, has been selected as the SRO for NBFCs. So now coming to the criteria. Okay, so let's discuss the criteria for the SRO NBFC, for the SRO NBFC. Okay, so membership criteria for the SRO for NBFCs. So SRO for NBFC, the SRO for NBFC sector is primarily for the NBFCs in the category of investment and credit company, the housing finance company and NBFC factors. Okay, so that means the membership in the SRO NBFC should be from the investment and credit company, housing finance company and factors. So this is the basic idea, that SRO NBFC should have the membership from these kind of NBFCs, okay. However, the SRO may also have other categories of NBFCs as its members, but these three categories are the main categories that should be member of the SRO NBFC. Okay, the recognized SRO shall have a good mix of NBFC, investment and credit companies, NBFC housing finance companies and NBFC factors. So NBFC should have the members from these three categories and should have a good mix from these three categories as its member to ensure fair representation to the smaller NBFCs. Now, as you know that the NBFCs are divided into 4 layers: base layer, middle layer, upper layer and top layer. So the higher you go, the bigger the NBFC and the riskier the NBFC is usually. Okay, so base layer NBFCs are the smaller NBFCs, they are the smallest of the NBFCs. So to ensure the fair representation to smaller NBFCs, the SRO shall have at least 10% of the total members of NBFCs in the base layer. So basically the SRO shall have at least 10% of the total number of NBFCs in the base layer. If it has 100 members, let's say SRO has 100 members, at least 10 members, at least 10%, that means at least 10 members should be from the base layer, that should be the smaller NBFCs basically. And in the base layer, the investment and credit companies and the factors are there. Okay, so at least 10% of the total number of members, that is 10 members here in this case, at least 10 members should be from the base layer and should be from the category of investment and credit company and factors. Now you will say, why not housing finance companies? So let me tell you that the housing finance companies, they do not come under base layer. Housing finance companies either come in middle layer or above. Okay, so this is the idea. So what is the percentage of the total number of NBFCs as members of SRO? That should be the smaller NBFCs from the base layer and from the investment and credit company and factor category. So 10%, at least 10% of the total number of NBFCs as the member of SRO, they should be smaller NBFCs from the base layer, categorized as NBFC investment and credit company and NBFC factor. Okay. Failure to achieve the aforesaid membership within 2 years of the grant of recognition as SRO would render the SRO liable for revocation of recognition. That means if the membership criteria has not been fulfilled within 2 years of getting the recognition as the SRO, then the SRO will have to give up the recognition as the SRO, or the entity has to give up the recognition as the SRO. So this is the basic idea. Let me summarize that basically the SRO for the NBFC sector, it needs to have the membership from the NBFC, investment and credit company, housing finance company and NBFC factors. Okay, at least 10% of the total number of members should be from the smaller NBFCs, should be from the base layer and should be categorized as investment and credit company and factors. Okay, now this criteria has to be achieved within 2 years of getting the recognition as the SRO. If you are not able to achieve this kind of membership, or you are not able to fulfill this criteria, then your recognition can be revoked. This is the idea. Now, other terms of recognition of SRO, the applicant should achieve a minimum net worth of rupees 2 crore within a period of 1 year after recognizing as an SRO by the Reserve Bank of India for the NBFC sector. The SRO shall maintain this net worth criteria on an ongoing basis. The maximum of 2 SROs for the NBFC sector will be recognized. Okay, the guidelines as given in the omnibus framework has to be followed, has to be adhered to, and different verticals or divisions within the SRO may be set up for catering to different categories of NBFCs. So now see, there are 4 layers, as I've told you that the NBFCs are divided into 4 layers. Okay, the base layer, that are usually the smaller NBFCs. These are non-deposit taking NBFCs below the asset size of 1000 crores. NBFCs undertaking these activities, peer-to-peer lending platform, the NBFC account aggregator, all these NBFCs are in the base layer. Then there is the middle layer, that all the deposit taking NBFCs, irrespective of asset size, as well as non-deposit taking NBFC with asset size of 1000 crores and above, they will come under the middle layer. Upper layer shall comprise of those NBFCs which are specifically identified by RBI as warranting enhanced regulatory requirement. That means upper layer NBFCs are those NBFCs that have been handpicked by RBI, that these are the big NBFCs that we have to put enhanced regulatory requirements on, okay, or these are the big NBFCs that we have to impose more restrictions on, more regulatory requirements on. This is the basic idea. So basically, the top 10 eligible NBFCs in terms of their asset size shall always reside in the upper layer. So top 10 NBFCs on the basis of their asset size. Okay, so top 10 NBFCs, the biggest of the 10 NBFCs, they will always be in the upper layer, as well as the RBI can identify additional NBFCs also to keep them in the upper layer that will follow the higher regulatory requirements from the RBI. Okay, this is the idea. Now the top layer will ideally remain empty, but if the RBI feels that there is a upper layer NBFC that has to follow even stricter norms from the RBI because it is getting very risky, so that particular NBFC can be sent to the top layer. Okay, so basically, if there is a substantial increase in the potential systemic risk from a specific NBFC in the upper layer, that particular NBFC that is having higher risk can be sent from the upper layer to top layer. This is the idea. Now, categorization of NBFCs, as I've told you, that the NBFC Housing Finance Company, the NBFC Housing Finance Company. So here, the NBFC Housing Finance Company will be included in middle layer or upper layer. Okay, it cannot come in the base layer. So the NBFC Housing Finance Company can never come in the base layer. The NBFC Investment and Credit Company and NBFC Factor, they can come in the base layer or they can lie in any of the layers. Okay, so they can come in the base layer. NBFC Investment and Credit Company and NBFC Factors. NBFC Housing Finance Company can never come in base layer. It is either in middle layer or it can be in the upper layer or it can be in the top layer. Okay, that is the idea. Now coming to the next criteria. So the NBFC, the SRO NBFC, basically the SRO NBFC, it shall submit an annual report to Reserve Bank within 3 months of completion of the accounting year. So once the financial year finishes, once the accounting year finishes, SRO NBFC has to submit an annual report to the Reserve Bank within 3 months of completion of the accounting year. The SROs shall submit the periodic or ad hoc returns as may be prescribed by Reserve Bank of India, as well as the SRO entity that wants to be recognized as the SRO, as the self-regulatory organization for the NBFC sector. It shall be, the applicant, the entity shall be set up as a not-for-profit company registered under Section 8 of Companies Act 2013, and the applicant, the entity, must have adequate net worth, okay, wherever necessary at the time of sending the application to the Reserve Bank of India or within the given timeline that the RBI has notified. So for the SRO NBFC, the RBI has said that there is the requirement. So the RBI has said that there is the requirement of minimum net worth of rupees 2 crores for an entity that wants to become the SRO for the NBFC sector, and this kind of net worth has to be achieved within a period of 1 year after recognition as an SRO by RBI. Okay, so for SRO, for an entity that wants to become the SRO NBFC, it should have the minimum net worth of rupees 2 crore within a period of 1 year after recognition as an SRO by RBI. So the net worth requirement has to be fulfilled. Okay, now the shareholding of the SRO, the shareholding of the self-regulatory organization, should be sufficiently diversified, and no single entity in single or in group, no entity singly or acting in concert shall hold 10% or more of the paid up share capital of the SRO. Okay, so basically there should be enough diversification in the SRO shareholding, and no single entity, either singly or acting in concert, should hold 10% or more of its paid up share capital. This is the requirement. These are the additional requirements. So set up as a not-for-profit company registered under Section 8 of Companies Act, as well as the entity that wants to become the SRO for NBFC sector, it should not let any entity hold 10% or more of its paid up share capital, either singly or acting in concert. That is the idea. Okay, so these are the additional details. Now coming to the next article, the small article, it is the WMA limit has been decided for the Government of India for October 2025 to March 2026, that is for second half of the financial year 2025-26. So basically what is the article all about? So the Reserve Bank of India can provide the short-term loan short-term financing to the government of India through the ways and means advances. Okay, so ways and means advances, the advances that is given by RBI, the loan or the money that is given by RBI to government of India, this is short-term financing. This is short-term loan that the RBI is giving to the government under the ways and means advances. So RBI, in consultation with Government of India, has decided that the limit for ways and means advances, the limit of the short-term financing for the second half of the financial year 2025-26 will be 50,000 crore. So this is the limit. Okay, and on the limit, in the last year examination there was a direct question on the limit, so keep this in mind. Okay, 50,000 crore. Reserve Bank of India may trigger fresh flotation of market loans. That means Reserve Bank of India on behalf of the government can take the loans from the market on behalf of the Government of India if the Government of India uses 75% of the WMA limit. That once 75% of the WMA limit has been already taken by the Government of India, then if the Government of India wants more money, the RBI may trigger fresh flotation of market loan for the Government of India, so that the Government of India can get the money from the market also if the Government of India requires. So Reserve Bank of India may trigger fresh flotation of market loans, can take fresh loan from the market on behalf of the Government of India if the Government of India utilizes 75% of the WMA limit. Reserve Bank of India, in consultation with Government of India, retains the flexibility to revise the WMA limit at any time, taking into consideration the prevailing circumstances. Like during the COVID-19 situation, you can understand that government was spending a lot for the healthcare facilities of the people, for vaccination facility, for the ration facility, for the welfare facility. The government was spending a lot. So if the circumstances warrant, if the circumstances are such that government has to spend more, so government can take more money from RBI. RBI, in consultation with Government of India, retains the flexibility to revise the WMA limit. That is the idea. Now, interest rate on ways and means advance loan that is given from RBI to government for the short term that the government has to return within 90 days. So the ways and means advances, the government has to return within 90 days. Now the interest rate on such loan is the repo rate. So currently the repo rate is 5.5%. So that's why the interest rate on the loan that is RBI is giving to Government of India under the ways and means advances, it also has the interest rate of 5.5%. Overdraft, if there is the overdraft that the Government of India is taking, so the overdraft facility is taken at repo rate plus 2%. Okay, so 2% above the repo rate. So if repo rate is 5.5%, the overdraft facility will be taken at 7.5%. Okay, so 7.5% is the interest rate that has to be paid on the overdraft facility if the overdraft is being taken by the Government of India. So this is the basic idea. Here the important point is that the WMA limit, so this is the loan that the Government of India takes from the Reserve Bank of India. So Government of India is taking the loan from the Reserve Bank of India for a short period of time that has to be returned by the Government of India within 90 days. So the WMA limit for Government of India for the second half of the financial year has been decided at 50,000 crores. The RBI may trigger fresh flotation of market loan. That means on behalf of the Government of India, the Reserve Bank of India can take the loan from market if the Government of India uses 75% of the WMA limit, as well as the WMA limit can be revised. The RBI, in consultation with Government of India, retains the flexibility to revise the WMA limit. Now the WMA, if the loan is being provided by RBI to Government of India, so RBI should take some interest. So the interest is the repo rate. So on the WMA facility, on the ways and means advance facility, on this kind of loan given by RBI to the government, so on this loan the interest rate is repo rate, that is currently 5.5%. If the Government of India is taking the overdraft facility, so on that the interest rate will be 2% above the repo rate. That is the idea. Chalo, coming to the next article. So Reserve Bank Integrated Ombudsman Scheme 2021, inclusion of State Cooperative Bank and Central Cooperative Bank. So basically Reserve Bank Integrated Ombudsman Scheme, it was introduced in 2021. Okay, it was introduced in 2021. So it provides the Reserve Bank Integrated Ombudsman Scheme. This is the Ombudsman Scheme. This is the alternate grievance redressal scheme. So basically, let's say you have a complaint against a bank. You have a complaint against the NBFC. You are raising the complaint with the bank manager or with the banking authorities. If you have a complaint against the NBFC, you are raising your complaint with the NBFC. If the NBFC is not able to resolve your complaint within 30 days, or the NBFC is not giving you a satisfactory answer, or if the bank is not able to resolve your complaint within 30 days, or they are not giving a satisfactory answer, then you can go with your complaint to the Reserve Bank Integrated Ombudsman Scheme, or you can go with your complaint to the Reserve Bank Ombudsman offices. Okay, so that is a alternate grievance redressal mechanism. So first you have to raise your complaint with the bank or the NBFC, the entity against which you have the complaint. If you get a satisfactory answer, that is good. If you are not getting a satisfactory answer, or if you are not getting the answer within 30 days, so you can go to the alternate grievance redressal mechanism, where you can raise your complaint with the Reserve Bank Ombudsman offices, okay, under the Reserve Bank Integrated Ombudsman Scheme. So Reserve Bank Integrated Ombudsman Scheme, it provides for cost-free redressal of customer complaints involving deficiency in services from the regulated entities, rendered by regulated entities, if not resolved, if the complaint is not resolved by the regulated entity within 30 days, or if the customer is not satisfied with the resolution, or the customer is not satisfied with the answer of the regulated entity, then the customer can go to the Reserve Bank Integrated Ombudsman Scheme for the redressal of the complaint. So first the person has to raise the complaint with the bank or NBFC. If the person or the customer is not satisfied with the response, or is not getting the response within 30 days, then they can go to the Reserve Bank Integrated Ombudsman Scheme, to the Ombudsman offices. This is the idea. Now what has happened, that in the Statement on Developmental and Regulatory Policies, October 2025, it was said that the scope of the Reserve Bank Integrated Ombudsman Scheme is being expanded. So Reserve Bank Integrated Ombudsman Scheme, launched on November 12, 2021, provides customers of regulated entities a speedy, cost-effective and expeditious alternate grievance redressal mechanism. If your complaint is not being resolved by the bank or NBFC or by the regulated entities, then you can go to the Reserve Bank of India Integrated Ombudsman Scheme. You can go to Ombudsman offices of RBI, so that your grievance can be addressed. So the Reserve Bank Integrated Ombudsman Scheme provides alternate grievance redressal mechanism. The regulated entities currently covered under the scheme include commercial banks, regional rural banks, scheduled primary urban cooperative bank, non-scheduled primary urban cooperative bank with deposit size of 50 crore and above, select NBFCs and credit information companies. So basically the commercial banks, the regional rural banks, the scheduled primary urban cooperative banks, as well as the non-scheduled primary urban cooperative banks, if they have the deposit size of 50 crores and above, as well as select NBFCs and the credit information companies, they are the entities that are under the Reserve Bank Integrated Ombudsman Scheme. Now it has been said that to expand the scope of the Reserve Bank of India Ombudsman Scheme, to enable the customers of the rural cooperative banks to access the mechanism of RBI Ombudsman and to raise their complaints with the RBI Ombudsman offices, it has been decided to bring the state cooperative banks and district central cooperative banks within the scope of the Reserve Bank of India Ombudsman Scheme. So first of all, I hope you have covered the Integrated Ombudsman Scheme in detail, because I've told you that the PIDF scheme, all the schemes released by the Reserve Bank of India, Internal Ombudsman Scheme, Integrated Ombudsman Scheme, Retail Direct Scheme of RBI, PIDF scheme of RBI, these are the RBI schemes, Liberalized Remittance Scheme of RBI. So these are the schemes of RBI that you have to do in detail. Okay, so I hope you have done these schemes in detail. So here basically it has been said that the scope of the Integrated Ombudsman Scheme is being expanded by including the state cooperative banks and district central cooperative banks also under the ambit of the Integrated Ombudsman Scheme. So all commercial bank, regional rural banks, state cooperative banks, district central cooperative banks or central cooperative banks, scheduled primary urban cooperative banks and non-scheduled primary urban cooperative banks, non-scheduled if they have the deposit size of 50 crore and above, they are under the ambit of Reserve Bank of India Integrated Ombudsman Scheme. All non-banking financial companies, excluding housing finance companies, which are authorized to accept deposits or they have customer interface with asset size of 100 crore and above, they also come under the Reserve Bank Integrated Ombudsman Scheme. All system participants, okay, credit information companies, they are also under the ambit of Integrated Ombudsman Scheme. So this is very, very important. The applicability applicability of this scheme is very, very important. All non-banking financial companies, excluding housing finance companies, if they are authorized to accept deposits, or if they have the customer interface with asset size of 100 crores and above, they are under the Ombudsman scheme. They are under the Ombudsman scheme. As well as now the State Cooperative Bank and Central Cooperative Bank, they have also been brought under the integrated Ombudsman scheme. This is the idea. So I hope this is very much clear. I hope there is no confusion in this. And the schemes of the RBI, they are important. So do it in a good manner. Okay. So this is the case. Chalo. Now this is the first question. I hope you will be easily able to answer this question. Now before going to the second question, let me show you that if you go to edutap.in, you can go to EduTap's website, where you can see in the courses section, if you want to solve a lot of MCQs, there is the Ultimate Current Affairs Test Series that is being provided to you at only 999 rupees. And you can see here you are getting 2400 plus MCQs, as well as you are getting the booster documents also for the past 6 months of the current affairs, where you are getting 2400 MCQs. So here, if you want to solve a lot of MCQs, if you want to analyze that where you are making the mistakes, how much data you are able to remember and such, so you can take this Ultimate Current Affairs Test Series. You can buy this Ultimate Current Affairs Test Series. That is good for your practice. That is good for your MCQ solving. Okay. So this is the idea. Chalo. Now this is the first question. I hope you will be easily able to answer this question. And this is the second question. I hope you will be easily able to answer this question. So try to answer this question. If there is any confusion, you can ask me in the comment section below. So thank you everyone. Thank you for joining, and do join the Telegram channel of EduTap so that you can get the PDF of the session. So thank you everyone.